Hi everyone, Mark Rogerson here. In what are unprecedented times at the moment with the coronavirus, we wanted to send some information to you as quickly as possible on the coronavirus stimulus package for business and also households that are eligible. Clearly it's really serious in terms of the landscape for business over the coming months, and we wanted to share this to be as clear as what we can be. There will be another video going out to clients in terms of what Rogerson Kenny's plans are, what we're doing now, how we'll continue to work in the coming months should a lockdown or like situation present itself. But in this video here, we really wanted to be clear on what the stimulus package is, how you can access it, how you can use it, etc. Accompanying this video, there'll be written text, so if you can't watch this video or it's not appropriate, there should be a downloadable or text on screen for you to view. So now I'll get into it. So the government has announced a $17.6 billion stimulus package to support the economy. I need to be really clear, these measures are not yet law, and this video is being shot in the morning of the 16th of March 2020. These measures are not yet law. We expect that they will be passed, and Opposition Leader Albanese has indicated as much, but they're still not law. Parliament's due to sit on the 23rd of March. We suspect they'll come through quite quickly, but please perhaps watch the news, etc. for updates on that, or indeed we may send something out also. The measures are due to take place from the 12th of March 2020, and as I said, the purpose of this video is to provide you with an overview as to the measures and direct you how to access these measures. So there are four main areas to the stimulus package, and the first one on business investment has two parts. So if you like, part one of the business investment section is there's an increase and extension of the instant asset write-off. So the detail is from March the 12th, 2020 to June the 30th, 2020, the instant asset write-off threshold will increase from $30,000 to $150,000. And this will be available to businesses with an aggregated turnover of less than $500 million. This increase from the current business turnover threshold of $50 million, so it's a significant increase in the businesses that can access this instant asset write-off. So an instant asset write-off means that you can claim, you can purchase an asset in that period of time discussed, and you can claim a tax deduction for the entire value of the asset in the year of purchase, not just depreciated over a number of years. Assets, some of the fine print, I guess, assets will need to be installed ready for use by the 30th of June 2020 to qualify. So you can't buy an asset, have an asset on order, etc. It's sitting in the warehouse, not plugged in, not being used. It needs to be in use. And look, we suggest you check the eligibility of this deduction with us before you make a big purchase. We haven't seen any detail to the contrary, but our understanding is it's simply just an increase on the current rules. So if you've been accessing the $30,000 immediate deduction at the moment, then you should be able to just do so up to the $150,000 limit as you've enjoyed currently. But as I said, the big watch out for this is the assets need to be installed ready for use by 30th of June 2020. And this applies to new and second-hand assets that you purchase, and also includes the fitting costs, etc., the cost of installation. Okay, so part two of the business investment stimulus is accelerated depreciation deductions. So this will apply from the 12th of March 2020 through to the 30th of June 2021. Noting the instant asset write-off I just spoke about finishes June 2020, so only a few months, where this accelerated depreciation deductions goes through to 30th of June 2021. Once again, businesses with a turnover less than 500 million can access this. And what it means is you can deduct 50% of the cost of the asset in the year of purchase, and the other 50% would fall under your existing depreciation rules. So if you're a small medium business or an SBE, enterprise, that other 50% would be able to go into the pool, like you enjoy now. And if you're not a small medium business or an SBE, as they're classed, then that would just fall under normal depreciation rules. So once again, check with us for your eligibility, check with us what it means for you. But yeah, that's quite an incentive. So 50% of the asset purchase is written off straight away. The other 50% just forms part of normal depreciation rules. A couple of points on that. It sort of seems to counter or cross over the instant asset write-off. Our take on it is if a business can't access the instant asset write-off for some reason, then it may actually fall under this accelerated depreciation deduction up to 30th of June 2020. But after 30th of June, so effectively from 1 July 2020 through to 30th of June 2021, this year will be the main go-to effectively for depreciation on assets. Another little caveat, which is in our detailed notes, is that this is for new assets only. So it's not for second-hand assets. Keep in mind that this is not yet law, so that could change, but our understanding at the moment is this is for new assets only. Purchased between 12th of March 2020, 30th of June 2021, and they need to be installed ready for use. So once again, if you're rushing out there to make a purchase, we suggest that you contact us first to check your eligibility and how much, etc. Measure 2 for businesses is cash flow assistance, and this cash flow assistance has two parts. The first one is a tax-free, what the government are calling a tax-free payment up to $25,000 for employers. I'm more liking it as a tax credit, but anyway, we'll jump into the details. So there's what they're calling tax-free cash flow support payments between $2,000 and $25,000. Will be available for eligible businesses with a turnover less than $50 million that employs staff between 1 January 2020 and 30th of June 2020. The way this assistance is going to work is there will be a credit up to 50% of the pay-as-you-go withholding amounts. So those amounts that we as employees withhold from our staff and give that money on their behalf to the tax office through our BASs or instalment activity statements. The lodgement of the activity statement will trigger the entitlement. If the credit you receive puts you into a refund position, that will be refunded within 14 days, the ATO tells us. But if it doesn't, it will simply be a reduction on how much you have to pay the tax office on your BAS or IAS. And the credit, as I said, is equal to 50% of the pay-as-you-go amounts, the pay-as-you-go withholding amounts, up to a maximum of $25,000. So if you're lodging a BAS for the March quarter and the June quarter, the maximum you can receive is $25,000 credit. And to receive that, you'd be paying, or you'd have $50,000 in pay-as-you-go withholding. It scales down to $2,000. Where businesses with an employee, even if they're not withholding, can receive up to $2,000. But yeah, more detail to come on that. So yeah, if a business pays salary and wages but it's not required to withhold, that a minimum $2,000 will still be made payable. Not sure how they will know that, but perhaps just simply the logging of the activity statement will trigger that. If you're lodging activity statements monthly, so you're doing a March BAS, April and May IAS, then a June BAS, those credits will be paid to you as you lodge. But like I said, a maximum of $25,000 per employer. So some finer detail to come on this. Part B of this cash flow assistance for business is wage subsidy of up to $50,000, up to 50% of an apprentice or trainee wage. So eligible employees can apply for a wage subsidy of up to 50% of the apprentice's or trainee's wage for up to 9 months, from 1 January 2020 to 30th of September 2020. These payments are accessible to businesses with less than 20 employees. Employers will receive up to $21,000 per apprentice or $7,000 per quarter. There's quite a bit of detail on this. We suggest you download our downloadable or read the text however it comes, but there's a bit of detail on this. And in order to qualify for the payment, the apprentice or trainee must have been in training with the business as at 1 March 2020. It's expected that employers will be able to register for the subsidy from early April 2020, and final claims for payment must be lodged by 31st of December 2020. So a bit more detail to come on this one. It's still not law yet, none of this is law, but we just wanted to give you a heads up of what's coming. Measure 3 is household stimulus payments. So this is one that's probably received the most press. So there's tax-free once-off payment for social welfare recipients such as pensioners, social security receivers, veteran and other income support recipients. Payments will be made from 31st of March 2020 on a progressive basis. Government expects 90% to be paid by mid-April, and once again it's a once-off tax-free payment for those who qualify. Measure 4 is a little bit different. It's light on detail, probably hasn't received very much press at all, and it's targeted support for severely affected sectors, regions and communities. So like I said, a bit light on detail, but there's $1 billion committed to supporting sectors, regions and communities disproportionately affected by the economic impact of the coronavirus. Tourism and around the Great Barrier Reef, the ATO is actually setting up a side office in Cairns, and there's also money for agriculture and education specifically mentioned, or impacted by the coronavirus. I suggest reading more detail on this and waiting to see what actually becomes law, and keeping in contact with us. But like I said, that one's a little light on detail at the moment. Thank you for watching. Hopefully it's been informative. Strongly suggest you read the detail. We've got sort of a detailed several page document on all these measures. Once again, they're not yet law. And please, before you make any decisions on this, we're here for you. Please contact us and let us know. Even if you think you're right, send your accountant or pod leader or director a quick email or phone call, and we can try and assist you. Thanks very much.